What up, everybody? Welcome to another week full of gems. Full of gems. Y'all know the first half of class, we like to talk a lot of technical analysis, talk about every single gem we could pull out of last week. The second half of class, we talk about what are our expectations for the upcoming week. And so, we try to get everybody prepared. It's going to be a big week in the market. I can already tell. There's a lot of interesting setups I'm looking at. So we're going to source it up now. Y'all know I keep my charts clean, so don't even trip. We're gonna go through every single thing on here. We're gonna talk about last week. And let's start here on Tuesday, right? Tuesday morning. Imagine you get to the chart and you see this. You see, even if you come down to the 15-minute, I was going to 15 right quick. And y'all can see people that came to my order blocks masterclass may recognize it. Solid order block, right? Things look good. Price should deliver us to these highs. We got it from the 15-minute. You probably target these 15-minute highs. That makes a lot of sense. The order block is a PDA rate, which is a premium discounted rate. What does that mean? Just picture PDA rates as like areas on the chart that price typically bounces off of or rejects on. So like anytime you see me like draw a rectangle, it's probably a PDA rate. So this is one of the PDA rates we talk about, which is a bullish order block. And I do know I have a very mixed audience. I have some people who have a lot of experience with smart money concept. I have an audience of people who's never heard of it, and they only know support and resistance and chart patterns and stuff, which I personally don't trade, but I want to expose you to kind of like how we view the market. So I'm trying to speak to both people. I might have to sometimes stop and explain vocabulary words I say. I'm trying to talk to everybody at the same time, so you gotta give me some grace. All right, so we use this area to take us to previous highs, ideally. So yeah, somebody had requested to record the meeting. I'm already recording it, so don't even trip about it. I'm already recording it. I'm gonna post the recording right after we finish, so don't even trip. So here we go. So we got a bullish order block taking us to 15-minute highs. So what I want to do is I'll look at the 1 minute, because real quick, I have a question. Matter of fact, I have a quick question, yo. Anybody in the chat know, like, if I have a 15-minute point of interest, what time frame do I like to confirm my 15-minute point of interest with? So chat is raining. I'm seeing a whole lot of, I see 1 minute, 1 minute, 1 minute. I see somebody say 15-second, 15-second, 30-minute. Well, let me clarify the question for the person that said 30-minute. What I mean is, if I have a 15-minute order block, right, which is the blue area, for example, what time frame do I look at when I'm trying to take my entries? I'm not gonna just get in because we touched the 15-minute. I want to see the 1 minute react, because remember, the 1 minute is in a downtrend until we touch the area, and then it's gonna go up. But I think I just said the answer by accident. So yes, the answer is 1 minute, y'all. It is the 1 minute. So what I mean by that is, I like to see the 1 minute invalidate bearish PDA rates, such as a bearish fair value gap, while simultaneously creating bullish PDA rates and respecting those. So you see, like, for example, we respected this 1 minute bullish fair value gap. This is good confirmation. I'm seeing good things. That should lead me higher to my 15-minute target. Now, the reason I brought that up is not necessarily for the entry, but more so for the hold. So I could say the same thing. As I'm targeting a 15-minute high, for me to continue to hold this trade, I want to see my 1 minute important PDA raise hold. So in this case right now, like, I don't want to see price come back under this red candle, to be honest with y'all, right? So like, I'm gonna keep price going. For me, I would still be bullish if I was holding this trade, or if I was, waiting on a setup. Let's say I wanted to play the reversal. I'm only take the reversal by confirmation through invalidation. Confirmation through invalidation. So oftentimes when people talk about confirmation, they talk about, maybe some type of break of structure, or like change of character, or like, they might wait for like bearish for value gaps or something like that if you're trying to take a short play. But you can also get confirmation by watching the other side of the market get invalidated. So the way that I look at the market every time I trade, especially if anybody ever comes to my live trades, y'all gonna see, like, I'm constantly asking myself, what is a bullish person thinking at this exact moment? And what is a bearish person thinking at this exact moment? Because a bullish person, like if I was holding a trade, once again, I personally would only be holding this trade as long as we could continue to respect this red candle. All right, so let's see if price continues to respect it. I'm still holding my trade. I got no reason to sell my trade right now. Now, even where it's sitting at, personally, I don't want to see it come back under this green wick. That's personally where I don't want to see it go. It shouldn't have to come. If we want to run this yellow line right here, right? It's no real reason to run that green wick for real. So it would be suspect to see that happen. And so what I'm describing right now, by the way, is understanding what true bullish delivery looks like, as well as understanding what true bearish delivery is looking like. And I think that's what allows us to get out of plays quicker than most, as well as enter plays quicker than most, as well as hold trades better than most, because we really understand what bullish delivery looks like, as well as bearish. You know which areas should not get invalidated. And we'll be talking about that a lot as the class goes on. So right now, we wouldn't want to invalidate this right here. These lows is very important. If we want to run these external highs, remember, these are the 15-minute highs. If we want to run those, there's no reason to come back under here. Price already made this efficient. It's time to go and run that buy side. I bet. All right, this is sus. But you know what? Maybe you don't enter short yet. You're like, let me give it a little room. Maybe I'm wrong. Maybe I want to. Let me give it a little bit of room. Let's let it run this red one first. Plus, it's all about time and price. So if you pay attention to the time right now, it's 9:22 a.m. The market opens at 8 minutes. So maybe you're a little hesitant going short when we're this close to the target, and 9:30 hasn't quite hit yet. And y'all know these 9:30 candles be like this, like my phone, yeah, like this. These 9:30 candles be crazy. So you want to probably be a little more cautious, and that's perfectly fine. Maybe you do want to wait for this, but I will tell you, to be real with y'all, you could already tell that we about to go short by the fact that we lost this area right here. We were never supposed to lose this area. I'm telling you. So that's a concept that I talk about deeply in my mentorship. But knowing which area should hold. So you already know where we're going. And then when this candle loses this, I already told y'all, if we lose that, I'm short. So let's say you were to go short right now. Boom, you went short. Where would you put your stop loss? Can I hit things in the chat? Where would y'all put your stop loss? Actually, before you say it, let me label it for you. Where'd you put your stop loss? Would you put it at A, which is the top right here at the swing high, or would you put it at I say B, like right here, or would you put it right here? See, please, you don't have to even mark on the screen. Y'all good. I'm just answering the chat if y'all don't mind. So what y'all think I'm seeing? Let me see the chat. So we got a whole lot of B's so far. Dang, B is the most popular answer here. C, A. C probably. I'm saying, okay, so B's and C's. Jamal says C above potential liquidity sweep. All right, so here's the thing. I want to speak to that real quick for what Jamal said and for the people that's putting other answers. This is a preference thing. I'm not too mad at y'all for people who's picking A or C, but to be real with y'all, this is what I mean by understanding areas that should not get invalidated if you're correct on your analysis. I'm trying to tell y'all right now, there's no reason in the world for price to invalidate this fair value gap and still be bearish. If we were to come back over this fair value gap, we're not bearish, bro. I'm telling you, we're not bearish. The next destination after that is these highs. I'm telling you. And so it's a low risk play to take this trade if you know the areas in the market that should not be invalidated. B is the correct answer here for real. And obviously it's a probabilities game. Things will happen that are out of the norm, but I'm talking about what is the most likely scenario. All right. So this right here is the place where you want to see hold. Me personally, if I'm trading this, my stop is right on top of it. Because if I'm being more specific, I really, really specifically want price to react where? At the lower half of this fair value gap. Once it starts coming to the upper half, guess what I'm doing? I'm de-risking my position. So let's say I got in 3 contracts. Once we lose the lower half and we start trading into the upper half of here, I'm gonna probably shed 2, keep 1 contract just in case. But that's how I personally trade this little area. And like I said, it's low risk. So here we go. Once again, if we're bearish, there's no reason to come back up in here. And mentees, if y'all notice this green candle, y'all may also, you could probably also could see why, right, mentees? Y'all don't have to say it in the chat, but mentees, there's no even reason to even touch that fair value gap for real. There's no reason to even touch that fair value gap. So boom, there you go. Now, price drops off, confirming what you already knew. Once again, if we lost the yellow line, you know we're bearish at that point. And there you go. So it's like understanding price delivery in a real way. And then let's keep this going here. All right, so I have a question for y'all. Hold on. I got a question for y'all. Got one more question for y'all. Let's see. So first of all, good play so far, right? You're making a lot of money. You feeling good. You ran these lows. Things is good. We don't even care about this order block no more, right? It's now irrelevant for the most part. But prices are just going one straight line forever, right? It's gonna retrace. So I have a question. If price were to retrace right now, where would you guys look for lower prices at? Number one or number two? Number one or number two? Which fair value? Let me draw them both because I know that everybody's familiar with fair value gap. So, there's a fair value gap right here, boom, and then there's another one right above it, right here. Number one or number two? That's what I want to know. If you think price is going lower to this yellow line with these equal lows, be relatively equal low. If you think price is going to the yellow line, where would you want to see that rejection at, one or two? Let me see what the chat's talking about. And Tanya says she got that order block masterclass on repeat. I appreciate you. It was a fire class, definitely a fire class. So let me see. I see a lot of ones, especially from my mentees. Mentees are saying one. Yo, the mentees is in here heavy talking about one. I ain't gonna lie. And we got a couple twos coming in. Yeah, twos fighting back. One ski. I am from my mentees is heavy in here talking about fair value gap number one versus fair value gap number two. And Eric said one, hopefully two is a breakaway. All right, interesting. So you talking that talk. We about to find out, because who knows? The Cartier said two is a dub. Heard you. We about to find out right now. Let's see. So I'm gonna erase that, and let's see who's right. This is like the chart debates that I put in the chat. Like this, like the arrow game. Remember I put the arrows there? I'd be like, which one would you see happening? This arrow or the arrow on top, basically. And we about to find out. And there's logic to this. That's how you can. I'm not gonna front. I'm gonna be real. I looked at the chat. I have 0 mentees picking the fair value gap on top. 0. Every mentee I have chose the fair value gap right here. So we'll find out if they're correct right now, because let's see if they're gonna make me mad. Like, are they gonna make me mad? I don't even know, for real. Mentees, don't get me mad today, man. Don't get me mad today, mentees. Congratulations. Y'all was correct. Dang, mentees, it's like y'all just be knowing. It's like you guys just guess correctly every time. I don't know. But this right here is price delivery, right there. Like, you got to understand which areas need to be respected for you to remain bearish. This is the fair value gap that should work. You don't want this fair value gap to get traded back to. If it does, that's not a good sign. If we came up that high, personally, I would expect price to move higher and run out buy side up here. So people talk about fair value gaps a lot. It's become popularized. And I'm gonna be real today. Like, I'm gonna be real. If you're a beginner in here, don't worry. Some classes I'm a lot more beginner friendly than others. Today I kind of want to talk. I want to source up. I'm gonna try my best to help out beginners as I talk. And I do suggest that you don't run away from the information. Like that makes no sense. But I'm just letting y'all know I'm definitely gonna be talking in the sense for, like, not the person who it's their first time looking at a chart. So but stick with me. I'm gonna do my best to cater to everybody. So if you understand fair value gaps, you guys will learn on these a lot. Like, hey, people try to validate every single fair value gap in the market, but it's like they're not. You can't treat them all the same, and they're not all used in the same way. So once again, if you're bearish, we need to reject this one, not the one on top. And it's a reason why all my mentees are saying the same exact answer, because they know that we wouldn't want that one. And then price dumps, and then we get to that sell side target right there. And so that's smooth. So good play. And then you could always work on your exit. So anytime we get to a liquidity target, what I try to do personally is I come down in the 15-second and I look for bearish PD rates to hold my play. So right now, if I was in this trade, we just hit the target, I'm gonna look for this fair value gap to be respected. Otherwise, I'm getting out of my trade. All right. I'm getting on my trade. So boom, here we go. I'm good. I'm still in my trade. Now at this point, I personally would move my stop based on to this green candle. But we shouldn't really disrespect that if we want to continue bearish. That's what I'll be thinking in real life for me. So here we go. Okay, so it's working so far, so I'm good. At this point, I don't want to see this fair value gap right here get disrespected. Right here. Once that gets disrespected, I'll probably get out the trade. Because to me, it's like this. It's an if-then statement. If we use this fair value gap, we make new lows. If we do not use this fair value gap, we're going to make new highs. And if we make new highs, to me, there's a chance we could push deeper into this range. And I don't want to be a part of that little rally. We already got to the target, right? This was our target, the yellow line. So I'm just trying to milk my play out a little bit. There's nothing wrong with having a limit order right here, meaning as soon as price touches a level, you sell your contracts and you get out the trade and you take your profits and you go home. That's cool. Me personally, I like to the point of liquidity is not to just touch it. The point of liquidity is to breeze past it. You want to like actually destroy the liquidity pool. You don't want to just touch it and go. So that's why I don't like necessarily having limit orders right there, because a lot of times we continue a lot lower. Okay. Let me back up though, because some people never heard of liquidity. So can I take a second to help those people out real quick? But so like liquidity in the market, all right. Just understand that at any given high and low in the market, there is liquidity because there's a pool of stop losses as well as limit orders that exist at any given high and low in the market. For example, if you went short right here, imagine I'm gonna circle it. Imagine you went short, you took puts, you took sells. Where would you put your stop loss? You probably put your stop loss right here at these highs. You're not unique. Most people do that. So there's always a pool of stop losses over any given high, as well as any given low in the market. All right. So the thing is, we target those stop losses because that's what market makers do. We just run with the big fish for real. So that's my. I forgot why I talked about liquidity. Oh, I was just saying, yeah, my fault. So the thing is, if you want to target stop losses, you don't necessarily want to touch it, because guess what? You might just be making equal highs. A lot of people don't place their stop losses exactly at the highs too. Some people, because they're tired of getting swept, they don't like quote unquote liquidity grabs. Side note, I hate that phrase, liquidity grab. But they don't like necessarily liquidity grabs. So they'll place their stop loss like right here. So the times when we pretty much make equal highs and then come back down, it's like those people are still protected in the market. So that's why, like, once again, if we're trying to destroy people who are short right now, I believe the market is not going to make an equal high. No, it's going to keep going and going and going. So that's why when I'm holding a trade, I'm already bullish and I'm holding a trade right now. I'm not going to exit right here unless I'm getting invalidated on some type of PD rate nearby. Then I'll just take my profits and go. But a lot of time I'm able to kind of hold trades longer than a lot of people or milk out a move, because I understand which PD rate should be respected if we're going to continue to the upside. I know which PD rate should be respected. And so that's what I'm showing you down here. In the short term, it's like I talked to you guys about, as soon as we touch the yellow, at first I was looking at this. When we breezed past it, I was like, okay, now I'm looking at this. And now I'm telling you guys the next place I'm looking at is right here. I want to see, these are the things that's helping me milk the trade. So some people got out at, 192.50. I'm currently still in the trade. And if we invalidate this, I'll take profits at, I basically got 12 more points out my move. Them 12 points that add up over time, I'll tell you that. They add up over time. So this is where I would personally exit if we invalidate it. So go. So real quick in the chat, say, if you're a beginner, please don't let this intimidate you. I swear that was me 6 months ago, and here I am now, understanding the charts, giving reasons for my answers on the chart debates, and being a big girl and taking trades. Stick to it. I appreciate you, Ash Cash. That is one of my mentees. I seen her grow in a crazy way, like from not taking no trades to like now she do this in her sleep, and she's like killing it on the chart debates and everything. So, and this is like she said, just 6 months ago, she didn't really know much about it. So just stick with it. Don't run away from information because you might not recognize vocabulary and stuff. Run to the information, not run from it. Come on now. But y'all know that already. All right, so I personally would exit my trade right there. All right. And oh wow, dang. I wonder, you see what I'm saying? Like that's why personally I like, don't ignore the signs. I'm at my trade right here. Because once again, it's an if-then statement. If not this fair value gap, then it's these highs. And if we come to these highs, we're going to come deeper into this range before the next move. So that's why I would exit right there. So, price flashes up and all of that stuff. That doesn't mean they can't come back down, but I was like, I know, do you want to get back that much profit? This goes from 165 all the way to 225. So that's what, 60 points? You want to get back 60 points of gains? I wouldn't want to do that. You could always get back into the trade. You could always get back in. So that's right there for that exit strategy. And then all right, so let's move on. Hopefully I enjoyed the first demonstration. Hopefully I got something out of the first demonstration. Anything. Hopefully even if you take one gem, then the time is worth your while. Because as y'all know, when it comes to trading, all you need is one gem that can make you money. That's all you need. And already the time is worth your while because you didn't pay for this class. It's a free class. And you might have just got one gem that can make you money. And so your time is already well spent. And the best part about trading is that it's lifelong knowledge. So you can use this for the next 10 years. I'll flash forward into a certain part. Also, I don't think I need this yellow line no more. I don't know if I need the external highs. And then let's get to, hold on. Okay, I think I found it. Okay, I have a question. Let's do a chart debate. Don't look on your charts either. Please do not cheat. Right now, are we going to line 2? Are we going short to line 2? Or are we going to line 1 up here? Line 1 or line 2? Line 1 or line 2, what are we doing? Which one's next? Line 1 or line 2? So I got ones in the chat. Cartier said line 2, took out liquidity already. Okay, so I got majority ones so far. Josh said it swept lows, heard. Definitely did sweep them lows. So I got mostly ones in the chat. Which one, line 1 or line 2? Dang, the ones is flooded in, I can't lie. But y'all know what? You know what's crazy? You guys are actually correct. Line 1 is the answer. Line 1 is the answer. Line 1 is absolutely the most probable place for price to go to. And so at this moment, that is exactly what I was thinking, people, at the exact moment, because I'm doing chart debates in my head all day, because what I'm able to do is know where price is going ahead of time. Am I perfect? No, of course not. I'm not perfect, but I'm highly accurate. And it's enough to make a steady living off of, obviously. And it's enough for me to give the knowledge to my mentees. And y'all see how they do on chart debates. They tend to get pretty much every one of them correct. So clearly we know a little something. And so just like what my mentees said in the chat, as well as some free people, so shout out to y'all, the answer is line 1. That's the most probable place to go. And there's reasons for that. Let me put that back. All right, so with that being said, if you know where the market is going, then at that point, all you need to do is find a good entry. So you think price is going up, that's cool. Here's what I'll be looking at this point in time. If I think price is going up and I'm watching it and I see that we just formed a 5-minute bullish fair value gap, let's label it so nobody gets lost. 5-minute bullish fair value gap. If I'm looking at this trade and I believe that it's going to the yellow line next, I do not want to see price come back down and invalidate this, right? I don't want to see price invalidate. If it invalidates that, that's a horrible sign to me, and I might think, okay, I might be incorrect. Maybe we were just drawing into this bearish fair value gap, and that's it, because there's no way that we should invalidate this area. So let me back up one more time and let you guys know. Notice the steps. The first thing we do is, through certain knowledge, you know where price is going ahead of time. We're going to line 1. All right. Then you discover then you ask yourself what PD array should support that bias. Here's the backwards thing that people do and that you learn on YouTube. They just teach you guys PD raise, and nobody knows where the market is going, so you take bad PD raise. Don't miss what I'm saying. I'm breaking it down even simpler. So basically, I'm talking to beginners real quick. What they do is people learn about what a fair value gap is, so they know how to draw these rectangles. You got a fair value gap right there. You got a fair value gap right here. So they draw these rectangles all over the chart, and they think every single one is relevant. And so if you don't know where price is going, how do you know which one to respect? Because this one on top is supposed to be a bearish one. This one on the bottom is supposed to be a bullish one. So who's supposed to win that battle? And you out here guessing. You got one trader taking puts, another trader taking calls, and nobody know who's supposed to be right. Because the thing is, they don't know where price is going first. PD array stands for premium discount array, and it's just areas on the chart for real that we like to see price bounce on or reject on. That's my simplest way of putting it. And so like a fair value gap is an example of like a PD array, basically. And so there's bearish PD arrays, things we should reject on, and there's bullish PD arrays, those are things we should bounce on typically. So this is a bullish PD array that I highlighted, and I'm saying that if we're bullish, that's something I don't want to see get invalidated. How do you invalidate it? You get the 5-minute body to close under a 5-minute fair value gap. Notice I didn't say wick. On the 5-minute time frame is where I got this fair value gap, right? So I need to see 5-minute candle bodies respect this fair value gap. I would be specific though. Matter of fact, let me not say that. So look, yeah, I want to see 5-minute bodies respect that fair value gap. Okay. So that's how it's valid. And yeah, my fault. It's the New York in me. I'll be talking fast. Plus, I got a lot to say today, so I'm trying to like get through it. But I also don't want to like leave people behind as much as I could. It's just kind of hard sometimes. So my point is, the first thing you need to do when you get to a chart is you need to learn. Here we in here. You need to learn like where price is going ahead of time. So this is where, like, I've had people on threads reply to my chart debates and be like, you can't possibly look at charts and know where price is going. And I just laugh at those comments because like my mentees do it every week for over a year. So I just maybe we the best guessers in the world and we should be playing the lotto. Why are we playing the stock market? We should play the lotto if we just such good guessers every freaking week. I don't know. But yes, you could predict where the market is going ahead of time if you understand certain things about these candles. And so my point is when you know how to do that, the first thing you do is figure out where we're going. We're drawing into this yellow line right here. Okay. Then you say, well, if we're correct about where we think price is going, what do you want to see get respected? This fair value gap should get respected. We not tripping about this bearish one. I wouldn't even be looking at this. You know what this bearish fair value gap becomes? You know what it becomes? A gap. Ain't that like a brain blast? Like, yo, what you mean a fair value gap becomes a gap? Do y'all not realize that fair value gaps are just gaps? It's just gaps, bro. Like gaps get filled. Y'all don't know that? Gaps get filled. So everybody thinks fair value gaps should always get rejected on the bounce. No, sometimes, a lot of times, more times than not, actually. More times than not, they're getting filled. So how do you know when you want to see one bounce done versus one actually get filled? You need to know where price is going ahead of time. That's the answer. All right. Now, I love what Kavan said. Kavan said, but there's also low-key a downtrend. And that's why I don't trade market structure. Market structure will forever throw you off in the market. I'm going to be real with you. Because I'm going to be honest with y'all, yo. Mentees, if I'm lying, I'm flying. My mentees already know, like, we already know we bullish about right here-ish. Like, pretty much, I'll say probably around right here, you already know, like, we bullish. You know what I'm saying? Like the mentee saying it, David said it. You know what I'm saying? Like, yeah, stop playing with me. Yeah, on a real note, like that's we already know we bullish. We don't need to see a change of character or anything like that. So and like Khalil said, we know market structure, but we don't even use it for real because we have better ways of validating price direction. And so I don't pay attention to because I know market structure telling you we're in a downtrend, but not the thing about market structure that it lacks understanding of what price truly trades for. Market structure brings validity to every single high and low in the market, and that's the flaw behind it. But every high and low in the market is not important. There's only certain highs and lows in the markets that's important because the market has a focus of bringing efficiency to inefficiencies. Okay, and so if market structure doesn't account for inefficiencies, how could you validate market structure? Some of y'all missing what I'm saying, but it's cool. But anyways, I'm already talking too much low key. But so my point is, like, we already know we bullish, and so that's why I'm not tripping on none of that other stuff. All right, so look, I say that to say, um, and no, it's not that it lacks higher time frame narrative, because you could do market structure on every time frame, so that's not what I'm getting at. And price is fractal, so that's not what I'm saying. It's market structure lacks understanding of what this algorithm, because we trade an algorithm, it lacks understanding what the algorithm truly trades for. The algorithm doesn't, it's not just about any given high and low. Highs and lows account for liquidity. Highs and lows account for liquidity, but a major objective of the market is inefficiencies. Market structure does not account for inefficiencies, but that's a major objective of the market. So, and yeah, I appreciate you, Kavan. I can't see the comments right now, but I'm just like, I like look at this stuff briefly. But yeah, that's a sign. If we talk the same language, let's get right, bro. So my point in showing y'all this is like, all right, you see prices battling between a bearish PD rate. Let me label this so nobody gets lost. 5-minute bearish fair value gap and a 5-minute bullish fair value gap. So look, we in between sentiment. And why do you think we chopped around here? So people who maybe on this day was wondering why price chopped around for like an hour straight, it's because we're in between sentiment. How do you know which way we're gonna break on the consolidation? Zoom out. I said about going to the 5-minute. The 5-minute already told us where we're going. So since I know where we're going, if I'm wondering like who's gonna win this war, I believe that we're gonna win the war to the upside. I don't believe the bearish fair value is gonna win this war and take us to the downside. That's not what I believe. So once again, even in consolidation, you can stay a little bit more calm and say, you know what, I'm only gonna cut this trade if we invalidate this 5-minute bullish fair value gap. And guess what? Y'all looking at it like, yo, bro, it got invalidated. Look, body's under it. And you missing the detail that I told you about. It needs to be a 5-minute body. It needs to be a 5-minute body because I got this fair value gap from the 5-minute time frame. Understand me? That's for one. And two, even if I look at the 1 minute, y'all gonna see here, like even though the 1 minute fair value gap actually takes you down there. All right. So that's a side note. Now we continue holding it. 48. All right. So here you see what 51. Now this is getting into time and price. So I'm gonna share one time period here where you tend to see volume come into the market. At 3:50 p.m. a lot of times you might see a move happen, and what you want to do at that time is you want to ask yourself, yo, what is the obvious place price should be going to right now? Which liquidity has been engineered heading into this, what we call a macro? So at 3:50, which is my least favorite one, but I'm gonna share that. There is a macro. So me personally, I'm understanding that, and I'm looking at this and I'm seeing, okay, I believe that price is gonna move towards the upside because I've been told you I'm expecting price to move towards the upside. It's just not ready yet. So during this time period, when I was trying to take this trade, initially I had to go break even a couple of times. I took a couple of very small losses inside of the chop in the beginning of it, of course. I was like, oh, never mind. Like, let me just wait for because price is gonna consolidate here. I understand that. And then I'm gonna show y'all like how it actually ended up going. So boom, this was my entry, and I'll show you that right here. My full freaking Zoom is in the way. Hold on. There's macro right here. So this is the one I had threw this one in the chat already in my Discord. But y'all can see like this was my entry. This is the same consolidation we looking at right there. Just taking it to the upside because that's exactly where I seen price going ahead of time. And y'all can see that was my entry, and then you see price flew all the way up there, ran the line one as we knew we'll go there, and you know the rest be history. We were able to hold it longer too through 4 o'clock. If you could even see on the screenshot, right there. Yeah, that's like up here at 234 type vibe. So yeah, I'm just this is all up in here. So I'm able to hold this whole trade. It's a really nice run. So think about it. We built up, this is what we call time distortion. When price is holding a PD rate for an extended period of time, not going anywhere, you wait patiently on stuff like that, and you wait for time to become a part of your analysis, because we're correct about this analysis. Directionally we're correct, but trying to enter before it's time for the move to move is where you're gonna run into some trouble. So that's what I'm talking about here. Like I waited for a time when the market will move, and that will be, once again, I think 350. That last 10 minutes will typically move aggressively towards an obvious liquidity pool. I already told y'all the obvious liquidity pool was line 1. So I literally was trying to play the move to line 1. But as I told you guys, I don't just simply exit because we touched it. I'm like, okay, I need to see us respect this fair value gap. Obviously, price touched it and kept going. So now y'all can see how I was able to maximize the heck out of this move. I had no reason to sell until I had a reason. Feel me? All right. So here, time and price, real talk. We always stressing that time and price. People just take trades based on price, but you need to incorporate time into your analysis. And once again, just showing y'all here, this bullish fair value gap, this bearish fair value gap, that's why consolidation entered the market, because we're in between sentiment. So that's going to show you when chop might occur in the market. But I'm letting y'all know, like, if you know where we're headed to, when you zoom out and you look at a higher time frame and you know where we're headed, it could tell you which side of consolidation we should break to. So I was holding this trade as long as the 5-minute held the 5-minute bullish fair value gap. As you can see that it did. Once again, we need bodies to hold it. As long as it was holding it, I was holding it. Feel me? As long as it's holding it, I'm holding my analysis. I'm telling you, y'all saw my entry, but I'm saying as long as it's holding it, I'm holding my analysis. If we invalidated it, I'd be like, yeah, never mind. I'm done for the day. I don't want to trade this. Because I ain't really want it necessarily to the downside, but they're invalidating what I wanted to see for the upside. I wanted to see this for upside, and then y'all see how I delivered. All right. So once again, hopefully you took something from that demonstration right there. And yes, line 1. Shout out to people that put line 1, because y'all was absolutely correct. All right, now let's get to. Well, I see I'm clearing. You see, I knocked off some of them yellow lines, some of the boxes. I'm clearing this chart up piece by piece, but we got more to talk about. So let's get it. Piece by piece. I can't wait to clear this chart up. I hate these noisy charts. Let's see. Wednesday at. Okay. I think I'm almost there. Let's go to the 5 ski. Okay, I think I know where I'm supposed to be at. All right, so now we're on Wednesday now. So if you guys know, this past Wednesday, it was FOMC minutes. FOMC minutes is a news event, an economic news event, where not Jerome Powell speak. No, he doesn't speak, but they release a document, and on that document, it's telling you a summary of what happened last FOMC. It's their takeaways and all that good stuff. And so it's not like as aggressive as when Jerome Powell is speaking on the podium, but it still causes a level of aggression in the market. And so like the Wednesday price action wasn't really that eventful. Like it kind of starts from here. I'm talking about the New York session. Yeah, it was an uptrend, but if you look at the nature of the move, you can see it was really wicky. We're not making fair value gaps besides this one right here. It's a very ugly day of price action for real. And so it's days like this where we just waiting on that 2 p.m. It's kind of best to stay cash. I'm not saying there weren't moves to make prior to, but you know, if you look at it, maybe even on a 1 minute, maybe it's a little more self-explanatory. I think this downtrend was a nice little drop off, but other than that, look at the uptrend here. Choppy right here. So not really too many good setups. But you know, if I were to have, I know you guys already saw it happen, but like I could say the same thing. I don't need the next destination right here is to come to run these lows. I know price is gonna come run these lows. So at this point, I'm looking for price to run these lows, but hold on. I could say the same thing. If I were to, I'm not gonna do it again because I want to just move on. But if I were to ask the mentees, where's price going right now? This is what we would be putting on. If it was a chart debate, like if I had up here versus down here, the destination would be to the upside. We know that already. So notice that I came to the hourly to decide that. Once again, I came to the hourly to make that decision. So since I came to the hourly to make the decision, The PD raise that I would like to see hold will be my 5-minute PD raise for me to maintain this analysis. Yeah, I'm missing it. Hourly destination, which is the first thing I do when I come to the chart. I determine what is the destination. Then I say, okay, if we're gonna head to this yellow line right here, what do I want to see hold to support that bias? Well, the 5-minute is a time frame that we confirm hourly biases with. So I want to see 5-minute PD raise continue to hold. And so you have this 5-minute bullish fair value gap. Price actually technically used it right here with this green wick. You see this green wick, price tapped into it and continue higher. We came right back down into that same inefficiency and used it again, which is not ideal, but it happens. The point of the matter is I'm watching 5-minute PD raise continue to hold price to the upside, which is exactly what I want to see if my bias is for price to come right here. That's exactly what I want to see. So, my bad. So look, I'm tweaking, my bad, y'all. Hold up. Okay, we good. All right, so now you're about to witness this. Price sweeps these lows, fills out the gap, and then continues higher. A tip for you on sweeps is if you have a bullish bias already and you're watching for a sweep, I like to see sweeps into PD raise. I like to see sweeps in PD rate. So I like how we swept but still maintain that PD rate. I'm not losing my bias for it. Once again, I'm not losing my bullish bias until we lose this area. And so, there's room to take trades here off of this sweep. It's the 5 minutes, so I would get on a 30-second for my entry personally. It's the 5 minute, so I would have to get on my 30-second for my entry. But yeah, I'm missing that detail, so I'm gonna just have to move on because I'm missing it. So look, what I'm noticing here is after touching this 5-minute PD rate, next to we make a bullish fair value gap on the 30-second. My. And then price taps into what? The exact 50% of that. Is that a coincidence? Gotta be a coincidence every time, right? Gotta be a coincidence. Because there's no way that the market is rigged. There's no way that it's algorithmically driven. Like, there's no way. Facts. All right, so just getting lucky. It's a coincidence every time. Anyway, so now price drives to the upside, and of course, we targeting highs and all that good stuff. And then we get to our target up there. Boom, ran the highs. Beautiful. It's a beautiful thing. All right, so next, price runs these highs, and then it starts to come down a little bit. What time is that? 140, 145, 150. All right, so look, price runs these highs. That's beautiful. Good job. It swept, held the inefficiency, ran the high. That's good. Good play. And now you good, Kia. We ain't hearing that. A good play. But the thing is, we didn't get to the target yet. So what I want to hear is like, at this point, if I know where price is going, I'm asking myself the same thing. Yo, on this pullback, what do I need to hold for us to hit this yellow line? And then lo and behold, let me show y'all something. Man. That's why I put this in my mentees chat. BT mentees only. This is a channel that only the mentees can see. These 5M BISIs, which is a BISI is a bullish fair value gap. Okay. So these 5M bullish fair value gaps mean a lot. And you see what I drew here on the NASDAQ and the S&P. I'm drawing NASDAQ higher. I'm drawing S&P higher. This exactly played out. S&P ran those all-time highs. Okay. This is my expectation for FOMC minutes. I wrote that at 1:52 p.m. It doesn't come out until 2 o'clock. So I'm writing this before it happens. That's a news event. So when I tell you that the news doesn't mean anything, it just brings energy to the market, but direction is determined through candles. This is what I mean. And in fact, I'm gonna put that last sentence back up, David. I'm gonna put that screenshot back up soon. That's a fact. That's a fact. But I'm gonna get to that. So it's crazy because like you got this. This is my expectation right now. I put that out before news comes, and then next thing you know, and I live traded this with the mentees too. We live traded this play. All right, 1 minute busy here. Oh, that's for like after, I think. whatever. But we're looking at this area to hold, and very specifically when we were on the live trade. Okay, you said, am I from New York or London? Because I said Lickle. Lickle would be more so speaking of Jamaican. Like, my mom's a Jamaican. That's how Jamaicans might say. But that's bad funny. I be saying Lickle on purpose. That's just me. That's my lingo. But look, so like, yeah, we hit. So look, we want to hold the upper half, everybody. I didn't want price coming to the lower half. So that's something I would say on the live trade. Like, once again, before the news came out, like, I'm looking for price to hold the upper half of that area. But the thing is, y'all, I'm not just going to get in right away because FOMC was coming out, and those are flash candles. So even though I'm very convinced of my analysis, I believe in myself and all that stuff, I'm also going to be a risk managed trader because, yeah, this is how I pay my bills, right? I got to be, there's no need to like rush into a play because y'all know, guess what? I'm wrong too. I could have been wrong, and FOMC could have came out and went like that. I'm like, oh, nah, never mind. So I'm still going to want to see that candle come out. And honestly, it was lackluster. Look at the 2 p.m. candle, and nothing even really happened like that. And then, you know, basically we want to see like some upside out of this. We tried an entry in here. We got stopped out first before we ended up getting back profitable. So we had tried an entry in here. I think we got stopped out based on this 30-second fair value gap failing. So I think we had risked 8 points on the NASDAQ, like losing 8 points. If you can't lose 8 points without blowing your account, you're over leveraged. So we lost 8 points in the first entry. And then I said, yo, let's just wait for price to clear these highs. Now I want to explain that part. Why do I say that? Because I think I wrote Bissy. I meant to write Sibby. That's what it was. Let me see. No, why does it say Bit? Maybe, all right, never mind. Maybe it is after. Why does that say Bissy? I'm going to just erase it for real. You know what it was? You know what it was? I know what it was. Hold up. My fault, y'all. It was this. And I was definitely planning for my class when I was very tired. I'm not going to lie. This is not even a Bissy, and it's not even from the 1 minute. It's the 5-minute Sibby. I'm bugging. But I'm gonna reword it because some people know what Sibby means. So I'm just gonna say 5-minute bearish value gap so we can stay focused. And I'm gonna remind y'all what this was. This was a 5-minute bullish fair value gap. Okay, so now everybody should be on the same page. We're in between sentiment once again. And what did I say about being in between sentiment? That's typically where chop can hit the market. So why did we get stopped out on the first entry? Because price wasn't ready to move to the upside yet. It needed to consolidate first. So cool. Lost 8 points, chilling. Because to me, I know we're going to use the upper half of this to go higher. That doesn't mean it has to happen right this second. Price could do this first, then move. So yeah, you could fight this price action. You even could get in and have a stop loss under here. That's cool, yo. Do you. I'm just telling you how I like to trade. Me, I'd rather try out my confirmation entry, risk like 5, 6, 7 points, and then try again when it's confirmed for real. I mean, like reconfirm. I could say reconfirm because I understand above this bearish fair value gap, we're definitely about to fly, and that's what I said on the live trade today. Like, yo, over this fair value gap, we're gonna fly. So I was like, let's just let it consolidate first, and then we'll take it above that fair value gap. We never ever in that live trade said, yo, I think we bearish, y'all. Dang, it rejected this, yo. Because once again, I already know the hourly told me where we going. I think y'all forgot that already. Look at you forgetting that already, everybody. You already forgot what the hourly told us. And so that's how you get caught up. Y'all be down here on the 30-second, the 1 minute, the 15-second, forgetting what the hourly told you was going to happen. Come on now. Don't ever get it messed up, man. Don't ever get it messed up. So yeah, it's going to consolidate a little bit, which I called before it happened. I called the consolidation before we consolidate. And then we re-entered right around here, right around like 22,248-ish. We re-entered looking for price to take that. On the entry, stop loss is based on what? Stop loss is based on us holding the upper half of this fair value gap. On the entry, stop loss is based on holding the upper half of the fair value gap that we're making to take those highs. So you might not understand maybe the full logic yet, but could you guys at least, if you're new here, at least see how everything we do is really low risk? Because if you're entering right there and your stop loss is 3 points away, what are you really risking? You're risking 3 points to make from 248. We trying to take 248 into what? 291. You're risking 3 points to make 43 points. 3 for 43 is that a good risk to reward? I don't know. Y'all let me know. All right. And so that's what I'm trying to say. So even if you might not understand the strategy fully yet, of course, it's like day one, and I'm not saying everything I could say because class will be 85 hours long, but just understand at least this is a way to trade, understanding what price action really is about at a deeper level, and you'll know how to have good stop loss. Notice my stop loss is not based on money, by the way. It's based on what is supposed to happen if I'm correct. If I'm correct, we should respect this if we're gonna go higher. If we disrespect this, I'm incorrect. I'm getting out the trade. I'm losing 3 points. I'm cool with that. Understand? So it's obviously I'm risking a baby amount of money to make a good little bag. But we was correct. Price flew, and it ends up coming back to the upside. Hold up, I think lagging. But yeah, then we run the target, and we had to enter again because we ended up taking profits, and then we got back in and rode it to the highs. I think we took profits probably on this little down move, I would assume, and then probably had to get back in. But people was on a lot trade, so they in the chat already. But yeah, so yeah, like, and then it gets to our target, and once it gets to our target, then we see what happens next. So now, look, when you get to a destination, you need to ask yourself, okay, now that we got to the destination that the hourly totals we going to, what's next? You need to see what PD rays are holding to tell you what the next objective could be. So at this time, for me personally, I already don't like the fact that we invalidated this red candle. I don't like that. That little red candle on the left, I don't like that. That's something that's suspect. I'm cash right now. I'm not taking nothing. I'm just telling you these are things that's not good signs for price action. All right. Price ends up making a new high after tapping into this bullish fit value gap. Congratulations. Maybe we still bullish. We about to find out. Dang, we coming back down. That's a horrible sign. That's not good. Here's where I will go short. If I was doing this up, because for me, I was done. I made my money. I was done for the day. I was good. I was chilling. Here's where I will go short though, looking at it in hindsight. So I'm just speaking hindsight right now. See these lows? These lows are ridiculously important right now to maintain upside. You should not lose these lows, because unlike market structure, traditional market structure, I actually know which lows and highs are important for price action. This low is important. Not every low, but this low is important for a reason. Now, once we lose those lows, that's when I would go short, and the way I would take it will be on the 15-second. As we lose those lows, what I would want to see is price. When we initially lost it, I wouldn't want to see it back above that green candle. When we lost it like all the way down here, I wouldn't want to see it back above this green candle. And if you waited till down here to enter, I personally wouldn't want to see it disrespect really this fair value gap, for real. Be real with y'all. But maybe by emergency, I would say like this green candle. I didn't even plan on coming down to this time frame, my fault, but I'm just low-key having fun right now. These are two places I don't want to see disrespect. If it disrespects those, I'm probably wrong. But yo, I know I'm right if we lose these lows. I'll tell you that much. These lows right here. If we lose those lows, I know I'm right. Y'all understand me? Then I know I'm right. So right now, my trade is based on price respecting either of these PD rays. To be clear, and you might not realize this is the 15-second time frame. So even if my stop loss was right here, this is a 9-point stop loss. So even if I'm not playing it super safe, I can still risk 9 points on the NASDAQ. And so once again, if you understand what I say when I say stop losses are always very much like very, very close, and it's not close out of fear, it's close out of understanding. And so, price comes up, rejects that one. For me, once again, that's where I would get stopped out. If we would have invalidated, that's where I would lose my play. I'd be like, you know what, never mind. So then I would be cash. And then so guess what I would wait on? I would wait on this. I would wait on losing these lows. So here's something that would make this suspect to me. where I might even start to de-risk because I was moving kind of fast. So look, rejecting this is cool. After rejecting this, not running these lows is not cool. So falling short of these lows and coming back is a horrible sign. And for me, I'll probably stop it out pretty much where we got stopped out at. And then I'll be like, you know, never mind, it's not ready. And I could be wrong, right? This is where I'll be like, yo, I could be wrong. But we're risk managed. It's like, I might have lost 9 points right there. I'm chilling. I'm not bearish until we lose this yellow line. Now I'll be chilling. I'll be waiting. Price goes up even higher. That's cool. Then it starts to come back down. So same vibe. Same vibe. I'm looking for us actually losing those lows in a real way with a fair value gap. All right, now that I got a fair value gap on the losing of those lows, and I see we just used it right there, I would enter this trade right now. This is where I would personally enter. We lost the lows with a fair value gap. With a fair value gap. It's how we lost it. And I would try this trade out like that. And then I will see what happens after that. And all right, there you go. So there's nothing wrong with entering a play twice, especially if it's based in real logic and it's based on like you have an actual calculated stop loss. But I mean, you have a close by stop loss money wise. You can enter a play twice. It's like your first entry is not always gonna work out, and that's okay. But you can always get in if you have a legitimate logic. So like even with this second play, if my stop loss is based on something 3 points worth, this is a 3-point stop. I'm like, what are you risking 3 points to make? I don't even feel like doing the math. Well, by the time we come all the way down here, 3 points for 50, like you chilling. Now, what did we bounce on right here to make it clear? You bounced on the lowest body. And mentees, maybe y'all see why lowest body worked out. Mentees, maybe y'all might see why lowest body worked out here. But you bounced on the lowest body here on the 5 minute, and that was the bottoms. That was the bottom of that move for now. The lowest body in the 5 minute. What is he talking about? Let me explain that to you. So I've already talked about this on Instagram, but like price doesn't always take the wick, at least not immediately. So when you learn about liquidity, they always tell you like, yo, price going to target the lows, but like sometimes the safest target is to let price come into the lowest body at a swing point. That's a safe target to exit your trade at, because that causes retracements and sometimes full-on reversals. And so a safe target would be the lowest body of the swing point. As y'all can see right here, this is the lowest body of this range of this low price lag right there. And there you go. All right, so that's what price bounced on, and then it went back to the upside pretty strongly. All right, so that was that. And then the day ends, and then we start to drop. And now I'm gonna show y'all something right quick. That was the low of the day right there. And then the market closed. It was the lowest body. Now let me show y'all something. So price starts to drop in the after hours, like after 4 o'clock. It starts to drop a little bit more, I think. Oh, never mind, that was the drop. But either way, then we consolidated. So we kind of right here. If I was to go right here and I ask my mentees, and I'm going to them because I don't want y'all to think it's just me. That's why I'm talking about them. If I was to ask them, yo, where's price going? We already know the next destination price has to go to will be these lows. That's the next destination from an hourly perspective. So in other words, the hourly is going to run these lows before it ever runs these highs. So in your head, you already have an hourly bias. So reiterating one more time, you get your bias from the higher time frame. You use the lower time frames to support that bias with PD arrays. That is literally the formula. I'm giving you the formula. How do you know where price is going ahead of time? Can't talk about all that all in one class. Really outside the metrics. That's a big part of what we do. That's the bread and butter. So once you know where price is going, it really opens the market up for you. And so what's funny is, I wonder if that person's here right now, but there was a person that I had like somewhat of a debate with in my DMs. It was really funny because price was about in this general area right around here. All right. And she follows a guy, and the guy, she's like, yo, he's the GOAT, this, that, and the third. And like, hey, do what you do, you feel what I'm saying? But like, I'm gonna be real, I don't really feel like I know any traders anywhere, nobody excluded, that understands the market like me. respectfully, that don't mean they're not great traders. I don't mean they don't make money. I'm just talking about the understanding of the market. So I'm just saying, like, to me, I understand we're coming here next. Her mentor guy was telling her we're going here next, and she was like, she was like, yo, she was talking her talk. That's all I'm gonna say. We was in the DM going back and forth, but it was like jokey to me because I know where we going. And spoiler alert, yeah, we ended up dying, as y'all probably know. But yeah, yo. So my point in that is I know where we going, and so there was when you know where price is going, you find like profitable ways to enter your trades at that point. Nah, it wasn't. I don't know who Zusi is. I don't even want to name names either. I'm not that type of person. I'm not messy like that, nothing like that. It's like I'm speaking scenarios right now. Like there was a person that said that, their mentor said that. There's so many fire traders out there, and I show love to everybody. You know what I mean? I'm just on a competitive level. It's because she was popping it to me. She was really like in the DMs, like talking, like, and it was just funny to me. She's like, hey, he's the GOAT. You could learn from him. I'm like, that's funny to me. Like, I can't, whatever. Don't get me started. Because I ain't passionate about what I do. Like, what? Like, I understand these candles different. That if I'm always writing down my analysis. I don't care who we talking about. I don't care who we talking about. Literally nobody excluded. Nobody. So anywho, I had taken this trade overnight or whatever, and this is actually what me and her was debating on, because I was short on the trade or whatever, and she didn't think I should be short, but y'all see, first of all, the trade like worked out here. This is my entry. I got in up here, wrote it down. Things was going well, but the reason why I was able to be short here without even going into too much detail about this trade is because of the hourly bias that I had. Okay, this hourly bias I had. So once again, when you have an hourly bias or when you have a higher time frame bias, it helps you trade the lower time frames so much more clean, basically. Okay, so the trade worked out, made my money, took profits and stuff like that. Then we have a retracement. Now I want to take out a Thursday morning right quick, because Thursday morning is where it really got lit for real. I wasn't even gonna take it. You see, I should have bet money on it. I'm not even gonna take her money, bro. Like, the thing is, I was so convinced. I was literally laughing, like texting her, like I'm laughing, like, all right. I'm not even gonna get into it, bro. I'm not even gonna get into it, son. It's just funny. Like, I don't care how much money somebody got. Do not matter to me, bro. I don't care about none of that. I know what I'm talking about with these candles in a real way, son. Yeah, I don't even be getting like that, son. I don't be talking like that, but don't challenge me either. Like, don't do that. So anywho, what you call it? Thursday. I said Thursday morning. Oh shoot. All right. Now, facts. Thursday and Friday got super lit, bro. It got active. So we live traded this as well, or whatever. I entered short. I took shorts here at first. Then I had to take profits when it came back into this range, and then we got back in. So first of all, let me explain why I shorted this. The reason why I shorted this is because once we ran these highs on top of the consolidation, it's no reason to come back into the consolidation. So we're into the consolidation, cool. I actually hated this 930. I wasn't short here or nothing like that, but like I was eyeing a move. 930 flashed up. That was a crazy. I didn't expect that. I didn't expect this flash up like this. But when it came back down, then I got short. And so I started my live trade like this. And then price came back up. I didn't want to see it come back to this fair value gap. I took profits when it came back to this fair value gap, because this fair value gap should have never got traded back to before we continue lower. But we did technically run these lows. We technically ran, the magnitude is annoying sometimes. We technically ran these lows. So that's why price retraced, because when price meets objectives, that's where retracements happen. When price meets objective, that's where retracements happen. All right. Now, this is where she really got clapped, because we ain't really see the market go short for real until now. We about to watch how it really goes short. This is where the girl I was arguing with, this is where she really got clapped. And you know what's funny? I ain't reached back out. I wanted to hit her DM so bad, like, yo, y'all, you see prices morning? Like, but I swear, son, it's like when I play basketball, people talk trash to me. I just kill them. I make more buckets, and you just watch them be quiet. You just watch them be quiet. You don't gotta like go ahead and talk. She's seen it. She in the market. She's seen it. She see what happened. But you see price, we got back in shorts, and then price really dropped off. Yeah, it got bad. It got real bad type vibe. It got real bad or whatever. But my point is, my main point, because y'all got me getting competitive on here. I'm like, I really be chilling for real, in a real way. My main point is, like, I want you guys to only trade with higher time frame direction. So if you ever come to the higher time frame and you can't figure out what it wants to do next, you're like low-key gambling because you don't know what PD rates to see get respected. You want to see get respected and anything of that nature. You feel what I'm saying? I don't even want her in my mentorship. No, I don't want her in there. She got bad attitude. I don't want her in there. She got bad attitude. We don't like that energy in my thing. So here, like, I ended up taking longs or whatever, and I put that in the Discord as well. I'm gonna explain that play right now, why I took longs. I just want to show y'all first, and then I'm gonna explain it to you. Oh man, where is that play 3? I think it's this joint. Here you go. So you see my entry right here. Took longs right at the bottom. So we had this huge bearish move that we caught on live. So I'll trade that on live with everybody. We caught this move down. Cool. And then we get to this destination, and I take it from the bottom and ride it right back up to the top. So how am I able to get in this trade? Let me show y'all real quick. All right. So we come into a daily bullish fair value gap. And this whole purple area is a daily bullish fair value gap. But when you look inside of it, there's a 4-hour bullish fair value gap right there. On top of that, and by the way, let me delete the daily one now. I'm about to delete it. Actually, my bad, my fault. The 50% of the daily fair value gap is the exact bottom of the 4-hour fair value gap. So it's like, it's just everything's in alignment. The 50% of the daily fair value gap, the filling out of the bullish fair value gap on the 4-hour, all in the right picture perfect spot. I'm gonna delete the daily one now, and let's just pay attention to the 4-hour. So I'm like, all right, if we're gonna be bullish in the stock market right now, this is the last destination that we can see hold. Because if this does not hold, we about to go bearish for real. It's about to get bad out here. If this 50% of the daily fair value does not hold, it's over with. And guess when I said that to y'all? I said it to you guys on Sunday. So on Sunday, we had class when price was up here somewhere. And I told you guys on Sunday, I said, let me remind y'all, on Sunday, I said this. I said, yo, everybody, we don't want price coming back to this fair value gap. If we're going to run all-time highs, everybody, we need to go and run it right now. Maybe use this volume balance or something. We need to go run it right now. There's no reason for price to come back here. And I said, but if price comes back here, it needs to hold the upper half of that daily fair value gap. Now I feel like I have to draw it again so I can remind y'all where it was at. If price comes back, it needs to hold the upper half of this daily fair value gap. It needs to. So with that idea in mind, I'm like, okay, maybe it's gonna hold it. I ain't want it touching it, but maybe it's gonna hold it. All right. So with that being said, now we get to the area after dropping extremely aggressively and making that girl cry. I can't help it. I'm playing them. So we dropped extremely aggressively. Now, when I see price invalidate this bearish fair value gap and push over this green candle, I'm taking my entries and I'm rolling with it. I survived this retracement because I understand price shouldn't invalidate this fair value gap. So if y'all see my screenshot, y'all gonna see, like, I held through that retracement. Remember, I got it down here and it came all the way up here and I held through this retracement because I understood this fair value gap needs to be respected for me to be correct. And it got respected, and then we ran, and then we hit my target. All right. So that understanding of which fair value gaps matter in the market is very important. And then, it really went crazy for real after that as a nice little play or whatever. My DMs is close to her. You said she's still holding. Yeah, funny. I'm gonna see the comments after. I'm almost done with the demonstration. I gotta hurry up now. All right, so that's that. That's upside price. I forgot price did, but I kind of need to move on. I know I'm missing stuff, but I'm gonna move on to Friday real quick. I can't keep y'all too long tonight. right, so let's move on to Friday, because Friday was the day that I really wanted to get to the most. Friday was fire. All right, we start pushing up, my people. We start pushing up. This is still Asia. Hold on. All right, man, I ain't want to show y'all that yet, even though y'all probably know what happened, but whatever. The question says, so can I apply this concept with buying options? Of course. First and foremost, this is the NASDAQ. The NASDAQ and the QQ are the exact same ticker. Remember, they move in like they move at the same rate. They're the exact same ticker. So if NASDAQ goes up, QQ goes up, and vice versa. If it goes down, QQ goes down. It's the same thing because it's the NASDAQ. This is just what futures people use to trade it, and options people use QQQ to trade it. Same thing. By the way, if you're talking about the technical analysis side of it, the technicals apply to every market. I do this same stuff when I trade gold, CL, which is oil, options tickers, Forex. Doesn't matter what we trade, crypto, it's the same technical analysis on everything. Everything. I promise you. You're very welcome. And that's good news because now you have to learn different things for different markets. Like, no, once you understand candles, you understand everything. All right, so you got South Cleveland and lows. All right, bet. So let me show y'all, man. So at this moment, I'm like, wow, I didn't want to use this fair value yet, but yo, it's working. And guess what? Bag short corral could be wrong too. So I'm like, yo, I didn't even want price. Remember, I told you on Sunday, I did not want price coming here to stay bullish. If we came here, I was like, that's not a good sign, but we gonna see. Yo, it's working. So I'm like, yo, maybe we are bullish. Like, I'm thinking, so this is why in the morning on Friday morning in the Discord, the free Discord, on Friday morning, I said, I'm looking to see if price could hold the upper half of this fair value gap so we can take out these highs. Yeah, these highs and these highs, both of them. Because if we're bullish, this right here, my people, this upper half is the most important part of price action right now. I gave an emergency fair value gap on the 15-minute right here. And I told you guys in the chat, I don't even think price gonna come down here because if we're bullish for real, it's supposed to be the upper half of this. That's it. So back to the person who asked me about market structure. I'm telling you right now, when price loses the upper half of this, I know we're bearish. I don't need to see a change of character. I don't need to see any of that stuff. I know we're bearish once price loses the upper half of this. I have inefficiencies in my analysis. I understand which inefficiencies matter to keep us bullish or bearish. Market structure is element, like, I'm not saying people can't make money with it. So like, just please understand, people make money with any strategy. I'm just telling you why I graduated from market structure, because I now know how to know where the market is going a lot earlier than people usually do. All right, so here we go. 845. Damn, I keep moving so damn fast. I'll just show you though. So, obviously when price they didn't even like at least try to trick us a little bit, like maybe use the upper half a little bit. Like, no, they just dumped right before market open. They just dumped. So at this point, we just bearish. Price uses the other side of the busy. Price rejects this 1 minute fair value gap, comes down, rejects the green candle, comes down. Everything looking good. In the chat, once we lose the upper half, we is right here. I put in the chat, I said London lows, because immediately, and this is how you adjust on the fly, you understand what should not get disrespected. It got disrespected. Once it gets disrespected, you ask yourself, okay, if we're not bullish, what are we? We bearish, right? Okay. So immediately you start getting bearish targets. I already had this on my chart because anytime I come to a chart, and I want you to do the same thing. So listen to me closely. I want you to do the same thing. Anytime I come to a chart, I have bullish targets and I have bearish targets because I understand that I get it wrong too. I'm not perfect. Okay. So for me, I'm like, all right, if we don't hold the upper half of this busy, then I have London lows. So that's why in the chat at I think it's like 9:30 or 9:31, I was like London lows. I just put it real quick and I kept trading because like I'm catching this move. Like you can like I'm finna catch that move, or whatever. And so yeah, like London lows got hit and then it retraced. And then I said in the chat, I said, if we lose London lows, that's terrible for NASDAQ. And y'all see we lose London lows, and then y'all see what NASDAQ ended up doing for the rest of the day. For real, got pretty bad out there for the rest of the day. I'm not even gonna do that in 1 minute. I'll just show you on the 5 minute because it's easier. But if you were not looking at NASDAQ on Friday, it got real bad, man. Then you fill out the daily VI. There's a daily VI right there. And then I want y'all to notice this. Where did price bounce on? Because that was the day NASDAQ straight line moved down. And we knew we was bearish since up here. So because of what we know NASDAQ's about to do all of this from up here. And let me show you something, because I feel like y'all might not really believe me when I say we knew NASDAQ will come all the way down there, because I feel like y'all think it's a game. Look, show you something. Show you something for it. Matter of fact, hold up, real quick. A couple things I want to show you. What did I say at the bottom of this screenshot on Thursday? Thursday at 4 o'clock. There is a strong chance of a major drop in this market because ES and NASDAQ had a divergence. Watching for that in the upcoming price action. So at 4 o'clock p.m., that's just the previous afternoon, I'm already thinking there's a strong chance of a drop that can come in the market. And then y'all seen what happened on Friday. And that's because what I was talking about was NASDAQ. It's probably hard to see on the daily time frame, but NASDAQ didn't run these highs, so they fell short and started to drop. That happened on Thursday afternoon, while ES ran all-time highs and then started to drop. That's what we call a divergence. ES is the S&P 500. I forgot to explain that. So the S&P 500 and the NASDAQ did different things, and that usually leads to big moves. And when I look at it, to further explain, what did I tell you guys on Sunday? We don't want to see price come back here in the first place. Why did price come to this fair value gap? So when I seen it come there, plus the everything, I'm like, yo, these are very bad signs. Like, I don't think this market is gonna keep pushing higher. And then we got this buildup of liquidity. Like, I'm like, yo, this is not looking good. So that's why I said that in the chat. All right. So see, it's Nancy, right, Cartier? Like, come on, that's bad work. So that's kind of what can help us predict that. And then on top of that, how do we know how far it's gonna go? Because once we lost, if we're gonna come all the way down here, which is the if-then statement, I'm gonna slow down for a second. The if-then statement is, if not the upper half of this BISI, then the swing low. Why do I know it's going to swing low? There are no inefficiencies in this entire run-up. Meaning there's no fair value gaps to catch it. Fair values can help catch it, right? There's no fair values to help catch it. So like the only bullish spot was this. Once it got lost, it's over. Okay, it's over. And it was already sus that we was pushing up anyways, as I told y'all on Sunday. It's already sus that we touched this spot in the first. Why we come here? So yes, it caused the failure swing. Price pushes down. If we lose these lows, where are we going? There was a volume imbalance under it. Boom, we're gonna fill that out. That's an inefficiency. And we come down here. Where did it bottom out at? You see this wick? See this long wick? You can measure 50% of that wick. Measure 50% of that wick, and then look at where price bottomed at. Look at where price bottomed at in the after hours. Since y'all think this, since y'all think this is just like it just has to be a coincidence every single time. Like these measurements and hitting to the exact tick on these measurements. It's like, man, it's like, is it just lucky, or is it like, are we actually trading the algorithm? Yeah, we train the algorithm. So what you need to do is learn the algorithm so you can take advantage of the fact that it's rigged. That's the beauty of it. And that's really what I teach, how to take advantage of the algorithm, because I understand a lot of stuff about the algorithm. And I feel you on that, Cartier. But I'm gonna move on now to the next part. This part of class can move a lot faster, but I hope you guys got a lot out of that. All the demonstrations. There's so much I want to say and so much I didn't get to say. And I talk really fast today. I know, because I feel like I have so much to say, but I'm trying to chill. Hopefully I got something out of something. You won't get everything. Most likely you're not gonna get everything. I understand that. But I hope you picked up just a few things as I'm talking now. I hope you picked up a few things. So yeah, let's get to the chart debate right quick. The long awaited chart debate. Let's finish this part right here. I appreciate you, David. Let's get to the chart debate. Oh man, this one was crazy. Yo, check this out. It's gonna be on YouTube. Also, it's gonna be in the free Discord. Both. The recording will be free Discord and YouTube. But yo, let's see. So this was, if you watch this on YouTube, this was the chart that we put out this week. You see line 1, line 2, line 3, and I'm testing out to see which one is expected. So look, what you want to find out? Let's see what the free people think. The free people, strong majority, think that it's line 2. They think we're gonna sweep them lows and push up to them highs. That's what the free community is thinking. And a few people think line 1 and line 3, but majority is line 2. Let's check it with the mentees, man. Mentees had a whole dialogue about this in the chat, like, yo, it should do this because of this and the third. And let's see what they was talking about. All right, so yo, we got 30 mentees saying that it's line 3 and only 7 thinking that it's line 1. There's 0 mentees that think it's line 2. 0. So what's crazy is the free people, most free people think it's line 2. Most of my mentees think it's line 3. And I don't even know who's correct at this point. I'm a little bit nervous. Oh my gosh. Hold on, I need some apple drink. Do y'all mind? Like just for a second, please. Gosh, my heart hurt. Y'all. Somebody call an ambulance. Hold on. Well, y'all want the answer or something? Y'all really want the answer? Like, all right, you know what, whatever. I'll just get y'all the answer because like y'all so pushy, like y'all so like aggressive. Everybody's got chill. All right, I got you. My fault. So let's see who was correct, man. Let's see who's correct. I got y'all right now. Let me pull it up. So nervous right now, son. Which one is it, yo? Oh, what's this? Line 3 ski. Line 3 ski. So yeah, shout out to mentees. I ain't gonna lie, y'all did y'all thing on that one because this one was tough. But y'all got it. Y'all learning. I'm proud of y'all. Majority y'all got that. 30 mentees, 30 out of 37 said line 3. So once again, is it a coincidence or is there a science to this? Because it's like 30 out of 37 people playing the same thing. At a point, we do this every single week. Y'all see it playing out over and over again. Are they just the best guessers in the world? Because if they're good at guessing like that, tell them to play the lotto. And yeah, I'm gonna brag on my mentees. I'm proud of them. We be putting work in a real way. So I'm proud of how they getting better. Real talk. Like I watch how it is the beginning of the semester to the end of the semester, and I love to see it. Like so, yeah. Line 3, they knew that. So yeah, you can know where price is going ahead of time. We all looking at the same diagram. Right? So it's not nobody's guessing now. It's like I hear people say that. It's really actually like insulting for real. Like to think we just out here guessing. Like, come on, bro. Yeah, I hope for y'all to join us for real. So explain. Explain is so tough because explain is there's so many like mentorship type gems that I would have to give to explain this. What can I say that wouldn't make my mentees mad? Because y'all gotta realize in the most respectful way, I hope y'all know I give y'all so much for free already, right? Think about it, I'm giving this whole class every week for free. I talk about a lot. So there's certain things I do like to hold for them. That's not even fair to them that they invested in the information, right? I hope y'all can understand that. So like I'm trying to figure out a way to explain this without impeding on their investment. You feel what I'm saying? It's like, what can I say? It goes into what we were talking about in class so far, right? Like knowing where price is going ahead of time, but that is the picture. Okay, so like if we were gonna push higher, you see this little area? This area had to be respected. This gap up, we had to respect this little gap up. This green candle, price should have tapped into that and ran higher. Like there's no reason to come back into this range. That's all I can say. There's no reason to come back to that range. You feel what I'm saying? And even if you look at this little section right here, how we swept these highs, like it's just clear. And then you look at this price leg and the mitigated inefficiencies. There's nothing that should stop us from running these lows, as y'all can see. That's my most fragmented way of trying to talk around what I'm trying to say. Like it's so hard though, but like there's it's called signatures. There's a lot of signatures that show you what price's objective is at this moment. And why do we move past this area? Notice how this candle already tapped into this gap. This whole thing is mitigated. So why do we breeze past these lows? Because there's a lower objective to get to. It's not going to come in double bottom right here. That's not going to happen. We finna breeze past that. There's inefficiency was already mitigated once, but yeah, yeah, yeah. So it's a secret society. Oh yes, it's trust. Got it. Yeah. So word, man. All right, let's final part of class. I'm gonna try to breeze past it as fast as I could. Let's get it. Let's get it. Let's get it. So let's talk about this upcoming week. I ain't gonna lie, I'm about to talk very fast for the rest of class. Some of the upcoming week right here. Whew. All right. Dang, today was a lot. I gotta plan less. I gotta plan less. All right. So Monday, there's no news. Tuesday, consumer confidence. Maybe a little reaction at Tuesday at 10 o'clock, but there's not like major news this week until we get to Friday. Friday is PCE, which is like very similar to CPI. Okay. And you're welcome, Maria, by the way. All right, so that's that. So just understand Tuesday might be some decent moves. Friday should be some decent moves. But overall, we're gonna see how this week go. All right, coming into the actual charts now. Going to the actual charts now. Let's start with the dollar. Let's start with the dollar. Do I do pre-market analysis only for the people I'm doing live trades with? But in the Discord though, like if what you mean is like, I thought you meant verbally. Like in the Discord, I'll be putting out pre-market analysis in my Discord. So if you're in the free community, you'll see it in my channel. You'll see it in my channel in the free community. I do that most mornings. Most mornings I put something out. But you know, verbally and stuff, that's the people I'm live trading with. So yeah. That's what I was gonna say. Okay, so people on the dollar, we've been bearish on the dollar, correct? I told you that we were bearish on the dollar. I said to you guys many moons ago, I said once we lose this area, I think the dollar can have a massive drop. All right. So we lost the area. The dollar comes in, pops into this bearish fair value gap. We need to respect the lower half of this. Let me circle it. This bearish fair value gap right here. We need to use the lower half of it. That's what we just did right there. Beautiful. We use the lower half of it. It's showing us good bearish signatures. That's what we want to see. Price comes up, and what does it do? Rejects this 4-hour semi. Dang, that's fire actually, because obviously I drew this before. I drew this really yesterday when I was planning. As I told you guys in the chat, I was on the charts for a lot of hours yesterday. So I wanted to see price respect the lower half of this semi. And y'all see what the heck is doing right now. Like, oh, y'all see what's going on. So, you know, we call it before it happens here. Or maybe it's just a coincidence every single time. All right, so anywho, we ran these lows, and you know I'm looking for price to come into that yellow line next. So I think we got a bearish dollar. It's maintaining that bearish sentiment right here. I'm looking at the yellow line minimum vibes. But I told you I like to be real with you. Like the dollar has some real potential downside. I wouldn't go crazy on my bearish analysis until I really see price lose this wick. If we could lose this wick, we going to drop off really hard down in the head, in my opinion, in my analysis, obviously. But for now, I would just aim for the yellow line, which is the lowest body on the weekly chart. Okay, so on the weekly chart, this yellow line is the lowest body on the weekly chart for that swing point, for that little swing point. Okay, all right, now that's dollar. So for forex people, if we have a bearish dollar, we're looking at bullish prices here on forex. So I said that last week, so the analysis hasn't changed. Last week I already talked to you guys about price drawing into these highs. We're gonna see if we could get there now, especially with the dollar showing that energy, and potentially even higher here on euro. On euro, I would aim for price to come into. It's gonna, well, I don't like saying that. There's a probability that it's gonna come into this weekly fair value gap right here. So I would aim for that. Most likely to run these highs, even if it sweeps it. Even if it's a sweep, it should get to these highs on the weekly chart. And you have this on recording, so if you know, just want to follow along for now and go back and draw these levels later, you can always do that. Here you got British pound. Last week, this is what I drew. This is the arrow I drew last week. I said I don't necessarily want to go back on the recording. I don't necessarily want us to come back to this fair value gap, but if we do, we need to use the upper half. We never came back to it, so that's fine. And now we're starting to push up. So I'm still looking for price to come back up in the here. I would aim for the highest body minimum of this daily chart. So, you know, pretty much coming back into this fair value gap. That's what I think British pound may do. New Zealand dollar playing out. We talked about using this fair value gap to go higher. So far, so good. Where would I see it going after this? if we invalidate this monthly SIBI, this thing is honestly probably gonna fly to these highs. I'm gonna be real with you. It's definitely a potential, but a safer objective to me is aiming for this monthly fair value gap in here. So you could aim for that next. And that's that. We almost doing Forex, USD CAD. So people who've been following me for a while, y'all know we've been calling this, like, honestly, some of y'all late, some of y'all just met me, but all these tickers up and down, we've been accurate. Like, so we talked about CAD using this fair value gap right there to take out this yellow line. Once it got to the yellow line and it came down, I was like, all right, it's gonna run to the lows of this consolidation, and ran to the lows of the consolidation. And then now we're talking about price needing to respect this SIBI here to remain bearish. And based on the dollar looking bearish to me, I can see us actually respecting this SIBI to go lower, because right now we're in between sentiment. That's where chop occurs. Remember that? That's where chop occurs. So we got a bullish fair value gap here on a weekly. You got a daily bearish fair value gap. And look at how the time frame, you can see that it's causing consolidation in the market, right? We've been consolidating it here because we're in between sentiment. So a safe way to play it is you could also set price alerts under these lows, because when we lose these lows, we're going to fly to the downside. Or you could try to snipe it if you want to, but you got to be careful trading inside of any type of range. The best trades exist outside of a range always. So I would say be careful, but I do believe the SIBI is going to beat the BISI. And some people might say, but yo, Rao, that's a weekly BISI. It's a bigger time frame than the SIBI. Yeah, but to me, I'm focused on objectives. This was the bullish objective to me. And if we wanted to move higher, we would have moved higher like that. There's no reason to come back to this weekly BISI just to go here. So I believe we're on a bearish mission right now, and I don't think we accomplished that bearish mission. So what I'm focused on is bearish PD arrays. And so I'm focused on bearish PD arrays. I think it's going to come and run all of this whole section. I think it could get pretty bad on CAD, but we need to lose these lows first. But it's an if-then statement. If we disrespect this SIBI, then I pretty much get bullish again. All right, so that's that. USDCHF, what am I saying here again? Down. Yeah, I would wait for price losing these lows with fair value gaps. So yeah, otherwise I would say cash on this ticker. It's consolidated anyways, but if we lose this fair value gap, then I would take a lower, but I don't like that ticker too much. And last but not least on Forex is USD JPY. Why did I draw this? So yeah, I wanted to see price reject this SIBI. I think it came above it though, so it went higher than I would want it to, because I wanted to see it reject this hourly SIBI, not come above it then go lower. But so I guess, I mean, it's going lower, but it didn't reject the PD rate how I would want it to. I guess it's rejecting the 4-hour one, right? So maybe it's just the 4-hour one, and that's cool. But you know, I will be bearish on this ticker as I'm expecting a bearish dollar, and I'm looking for price to come into these lows down here and even lower for real. So yeah, man, I don't think it did this whole journey just to not run those lows. So that's a short term, like, low hanging fruit objective is running these lows out. But I think that's kind of clear. But you know, if we're gonna get there, let me see something real quick. I think under these lows, it should go there next. Maybe looking into this 15-minute SIBI to take us lower, but personally, I do think I feel like a safer play is just literally waiting for these lows to get ran. And as long as it's getting ran with fair value gaps you could use for a stop loss, I would take it into these lows. Just as a short, like, maybe even a day trade for real, you know. But yeah, because if we're bullish, most likely price won't sweep these lows again just to go higher. When we have higher time frame telling us we should be coming here, right? The higher time frame is supposed to be coming in. So that's the logic on that little trade. And then quickly, Bitcoin, no real updates on Bitcoin right now. I was looking last week to see if we would get a little pop. We got a baby pop, but it's still in this range. Nothing to talk about on Bitcoin, nothing I haven't said before. Back last year in like June 2024, it's either June or May, I said Bitcoin will come to 95,760. So we watched it deliver there, and the next destination was 122,520. So we're still waiting to see what Bitcoin wants to do next. All right, and let's move back to futures right quick. It says participant could now see your screen. Did I lose connection or something? I don't know. I'm looking on my phone though. I can see it. I guess I can still see. I think this glitched, I think. But I guess I can still see. All right, so let's keep moving. We almost there. We almost there. We almost there. So bet we good. Appreciate y'all. All right, so here's the thing about Nas World. So far, is getting that bounce on the area that we would see bounces come from now. Let me my phone. Remember I told you guys about the halfway market at that very long wick? That's what we got the bounce on. So we're so far we getting that bounce on Nas. I didn't really want to see this SIBI necessarily get traded back to, but it got traded back to. So I didn't really want to see that if we're gonna be bearish. So I low key feel like price is gonna make a retracement into this fair value gap before maybe moving lower. But I need to watch price. I'm not like as convicted on this. I feel like this fair value gap is a potential before potentially moving lower. It's also give you a chance for an inversion as well. But let me see some. Yeah, that's a crucial area because to me, if we disrespect this, then I got price going all the way up here. If we disrespect this, I think price goes up there. I don't think it comes to these fair value gaps to reject. I don't think that happens. I think it's like it's either gonna be this one or we just gonna be bullish. Right, so I'll be watching for that. And of course, if it turns around, if we lose the lows from Friday, if we lose Friday's lows on NASDAQ, I got price running into, let me show y'all. So if you look at your chart, take the lows right here as a target. And I think under that, it goes to there's a VI right below it. For those who know what a VI is a VI right below it, the remaining part of it. I think price will draw into that. So I will keep it there for now. And if we get a real bearish week like that, then it'll probably come to the daily lows body next. That's my next destination before I think we get another retracement. All right, daily lows body right there. But yeah, I have this on recording, so y'all see the different levels I'll be watching to the downside. All right, these are levels I'll be watching to the downside. And you guys already now know the bullish plan if we do push up, which I pretty much only get bullish on the NASDAQ in a real way above this fair value gap. And if there's an update, it's gonna go on my channel. So if I change my mind or something, it'll go on my channel. But for now, that's how I feel about what's going on. It's happening in my live trading. That'll be joining the premium side of my Discord. That link, I don't know if you found me from Threads or Instagram, but that link is in my bio on Threads and Instagram. So it's tapping in my live trading. It's on both. And when I post this on YouTube, that link is also in the description of my YouTube. So yeah. And 4 hours, man. Right. So yeah, that's that basically. That's that. All right, cool. Let's move on. So yes, we almost done. I'm breezing through this pretty fast. Let's get it. We almost there. Honestly, it's the same sentiment for ES. I'll be looking in the same areas. I'll be looking probably at the halfway market is this 4 hour bearish fair value gap for now. Which from the hourly perspective, that's me looking at this fair value gap getting respected. Ideally, if we're going to be bearish, if we start pushing past that, I think ES moves past these highs and it makes a new all-time high. And I'll let y'all know if I change my mind on the Dow Jones. On the Dow Jones, losing this fair value gap is very important for more downside. I think the Dow is making a retracement right now to go lower, personally. So I would say the same thing. I would identify for the Dow low key though. Let me be real. Low key, I don't want the Dow to invalidate this fair value gap on the hourly. Ideally though, I don't want it to invalidate that. I really don't. It could, but I don't really want it to. You see this from the 4 hour real quick. All right, from the 4 hour kind of making me change my mind, low key. I apologize. I'm looking at it with fresh eyes right now. My fault. The 4 hour, I'm cool with price coming to the lower half of this 4 hour bearish fair value gap. If we come here, I'll be looking for shorts if I get confirmation, and if I get confirmation only, would I be looking for shorts to go lower? Because when I look at the Dow Jones on a weekly chart, my next destination that the Dow Jones should be going to on a weekly chart is these lows right here. And so any retracement now, I'm bearish on those retracements. So what I did was I come to the 4 hour and I'm like, okay, if the 4 hour is going to retrace, I want to see the 4 hour reject this bearish value gap so we can get to what my weekly objective. So that's, once again, you're framing things from the higher time frame. Then you find your PD raise. The Russell, I'm eyeing this 1 hour bearish fair value gap, but it also can go higher, of course, to pretty much. Yeah, I would look at this hourly fair value gap as well as something that could reject price to take us lower. I want price to come to the upper half of this. So even though it's a bearish one, even though it's a bearish fair value gap, I will want price to come to the upper half of this to go lower. Okay. So that's if we get that pop. If we reject this right away, it's self-explanatory. And under these lows, I would have the Dow Jones come into 2172. Under these lows, I have price going to 2172. The next thing that I would want to see reject, though, once again, is the upper half of this hourly fair value gap. Then I would take it there. So it's either going to get there right now or for this one, or it'll come up there and then go there. If none of those work, then I would be bullish on this ticker and I would aim for higher targets. Like I would aim for 2254 and even higher. But I'll update y'all in the chat about that for real. And thank you, True, for putting the live trading link in the chat. Appreciate you, True. And CL, y'all. CL. So CL, I tell you, man, I've been bearish on CL. Last week we seen a little retracement. Then you see it dropped off on Friday. We've been bearish on CL since it rejected this weekly civic. Since before that, to be honest, we've been bearish on CL since before that. My fault, but there was a week where it opened up, gapped up, hit this, and came back down. So I was like, yeah, I'm still bearish because like I was bearish. This gap up can make you a little nervous, but I was trusting the higher time frame. When I look at the higher time frame, my destination for CL is to come into these lows. The weekly told me that I'm looking for it to come to those lows, so I don't really believe in anything to the upside. And so here we go. We'll see if we could get there. The next mini destination will be 68.43. If you just want a baby destination, we're getting a reaction off of this daily VI, but I think it'll push back down. Gold. I'm trying to finish within the next 5 minutes. All right, so on gold here, I wouldn't get bearish on gold until we lose this bullish fair value gap. Do I think we'll lose it? Yes. I personally think gold is going to lose this fair value gap. Would I be looking for plays on it until it does? No. When it loses, if it loses it, that's when I would look for shorts on gold, and I would take it into these lows. And I do want to point out that, was this last week? I think it was last week. It was last week in class. Gold was down here. Remember, our class is at 6:30, right? So gold is literally right here at the beginning of the week. After a huge drop off, and what did I say last week? I said I'm not bearish on gold. I have gold coming back to these highs, and I drew an arrow like that. Go back and you go back to the last recording, you're gonna see that, and you see what gold did last week. It delivered. So even when everybody's bearish, and I know what I'm looking at. And then so once again, the analysis here is for me to have gold come back to these lows that we just engineered, because now they engineered sell side liquidity here. I want to see it lose its fair value up, then I would take it into that sell side. Nothing new to say about the Nikkei that I haven't said before. We're still in this range. I want to see it run those lows. SPY and QQQ, same thing as NASDAQ, so I'm not even going to speak to it much. I need to see one thing though. First of all, this looks the same as NASDAQ. So once again, as long as we can get the rejections you want to see, I personally have the NASDAQ and the QQQ both. If we get the rejections I want to see, I have them both. This is so bold to say. Starting a potential bear market. Ain't that crazy to say? But as long as if I continue to see the sentiment that I need to see on the chart, we can be starting a bear market on the chart. We'll see though. I still need to see my confirmations, but I'm just looking at the potential because we've already seen plays like this on a lower time frame. But you got to ask yourself, what can stop NASDAQ from coming all under here and running? Like, what is supposed to stop it? Do you see an order block or fair value? Do you see anything that's supposed to stop it? I know I don't. And if we was bullish, once again, we should have used the upper half. We breezed past that fair value gap instead. I'm just saying. I'm just saying it looks very bad. It looks very bad. This market's been so resilient though. There's a lot of manipulation going on, so we'll see what happens. But I'm just telling y'all, you heard it here first. And I got screenshots talking about this months ago. So, but I will bring that up eventually. Now, I put this.
Pretty much cut off from all that.
Hold up, somebody running the screen. Just be careful, y'all. So look, probably the last thing I say, and I agree, I feel like they're just building position. Probably the last thing I say is this. I put out a video already that we're gonna have to get Buddy out of here. All right. So look, I put out a recording from July 7, 2024, back when price was around here. And I said, I don't believe in any drops on the S&P 500 until SPY comes to 611.85. When price is back here, y'all, this is all-time highs, mind you, never been here before. This is a target I had from SPY, 611.85. I said, there's going to be pullbacks, everybody, but don't believe in any pullbacks until price gets to 611.85. Once 611.85 comes, don't be surprised to see if there's like a bear market that occurs after that. Go check the recording. I already put the clip out in my channel and everything. That's a actual recording from these type of classes. I do these every Sunday. That was July 7th class from last year. And then y'all see we got to 611.85. And then you see how Friday looked. And then when I talk to you guys about how there's nothing really that should be able to catch price, it looks very bad right now to the downside. And so it's like, I'm not, anything could happen. It might sweep these lows and push back up. I'm just like, y'all know, that's why my eyes are open, because I know how important this level is. That's why my eyes are open. Like, is this really going to be the top? We're going to find out. But I called this 7 months ago that price would come here and then reject. 7 months ago, I said that. So that's that. And then it's there's honestly there's actually more tickets, but I'm not gonna go through them because I planned too much for this class, so I apologize. I had some like setups for y'all on options tickers that I haven't favorited, but I can't. It's gonna the class gonna be too long. Class is already too long today. So yeah, if you're watching this on YouTube, definitely subscribe to the channel, like this video, and check the links in the description because I have the mentorship that's coming out mid-April. We start that mentorship in mid-April, and join the free community. That link is in there. My Instagram, everything. Just tap in with me. We're gonna do these more every single week. We here. You know how we do it. With that being said, that is all she wrote.